In today's video, we're going to be talking about Elon Musk's latest and craziest tweet. Okay, the first one, there's two. First one is going to be he's selling all of his possessions and he's going to be owning no house. Second one being the craziest one of all time. He actually stated that he thinks that Tesla stock is too highly priced at the moment, in his opinion. With Elon stating Tesla stock being too highly priced, this was an extreme catalyst and made the stock drop 9% in 1 hour. This was a pretty crazy one. People not happy about this. The market value went down $14 billion. Many are saying Elon might have got hacked. I personally don't think he got hacked. Like, this is in Elon's personality. This is the type of thing he does. He has very strong opinions. That's like a reason why we love him, but also a reason why he gets under our skin sometimes with tweets like this. Now, we can't rule out that Elon got hacked, but let us not forget that this is in his nature to share his honest opinion all the time, even if it's to his own detriment or the detriment of his company. This is tricky because we love Elon so much. Elon is not like any other CEO on social media. He has got major followings. They're more like a cult following in comparison to any other major CEO. This has also not been the first time Elon has got in trouble, the last time resulting in the SEC giving him a total of plus minus $40 million in penalties. I'm personally not too worried about this as I'm a long-term holder in Tesla and I really believe where the company is going. But what I am worried about is Elon. Last time he did something like this, he got kicked out as the board chairman of Tesla. Now I feel Elon is like the Steve Jobs to Tesla. If he leaves, I don't think a lot of innovation will happen. They've got some of the best engineers, I understand that, but Elon's just a driving force behind that company. Personally, I'm not too stressed about the stock. I do think it's going to recover quite strongly actually, but in the short term there is definitely going to be a downside, as we've already seen 10% in 1 hour after the tweet. The last time we experienced a tweet like this from Elon is when he stated that Tesla was going private at $420. Quite a crazy one also. Market didn't like it. It's really junk how drastic the stock gets affected when Elon does something like this. But for now, obviously it's really important what Elon thinks of the company and what the share price should be. But I personally don't really care what he thinks it should be. What I personally care about is his genius engineering skills, his ability to secure funds, his brilliant business mind, and also obviously smashing the like button for the YouTube algorithm. But other than that, one of the things we can address regarding financials with the company would mainly be the PE ratio. The relationship between the PE ratio and the stock price. A high PE ratio indicates that investors are excited about this and they have big expectations for the future earnings of a company. But also you can look at it from a different perspective and say a high PE ratio doesn't mean it's a better investment than a low PE ratio. A high PE ratio can also indicate that a stock is being overvalued at the moment. With a stock being overvalued, if a stock doesn't meet expectations, the stock price is going to be affected drastically. Then the stocks will come down and make sense of that PE ratio. So Tesla's PE ratio at the moment is 161. Ford's is 9.25, quite a crazy drastic difference. The automotive industry average is about 20.88, I think it is. So you can see where a lot of people are saying the stock is overvalued. But I personally feel you can't compare this company directly to other automotive companies, as they are not just that, they're so much more advanced and they're really changing the way the world thinks about electric vehicles. Now this company is an innovative technology related company as well. So let's just compare it to a company such as like Amazon. I know you can't really do this because it's totally different industries, but if you just listen far enough in this video, I'm going to explain how I'm going to compare them to each other and make a bit of sense of this all. But let's just look at it as innovative and groundbreaking companies. So Amazon's PE ratio at the moment is 109. So put into perspective what PE ratios normally work between is 20 and 80. So normally between 20 and 80 is where people can make a lot of sense of it. So Amazon at the moment being such a crazy company, really professional, doing extremely huge things in the past 20 years. Amazon's highest PE ratio ever was 3,732. Their average is actually 144. So if you compare that to Tesla's 161, that isn't so crazy anymore. So that's why personally when I do compare it and I look at it, I don't know if you can compare it to normal automotive industry. Because they're all run on old business models and stuff like that, where Tesla is really, then they've changed the game with the car and the electric vehicle and everything, but they also run totally different business models. They make vehicles for order. So this is how they did look once upon a time, and I feel currently that this is where Tesla is. Very difficult to make sense of at the moment, but I feel that Tesla has a long way to catch up, and I feel that the market will eventually start understanding Tesla a lot better. To give you a little example of a company that isn't doing too well and people don't understand their financials yet, if you had to invest $1,000 into Amazon in 2008, like say when they weren't doing too great in the market crash and everything, if you bought it at $48, you would have got around 20 shares plus minus. And currently it's 12 years later, the stock's at 2,284. That is a 47x return on investment in 12 years. I don't think you can get that anywhere. And personally, I would put money in knowing I'm risking 100% if I knew that the upside was 47 times. So just to recap, that's if you invested $1,000 12 years ago, it would be there for $47,000 at the moment. To bring it back to Tesla, I don't think they're going to get you a 47x return in 12 years. They're very innovative and they're totally different to the automotive industry, I feel. So I don't know if you can compare all that. There is a lot of hype. It's definitely a hype stock, it's growth stock, but there's a good reason for it because they've got a lot of stuff behind them. Also remember, Tesla hasn't consistently been profitable yet at all. And companies that we're comparing them to are companies that are profitable consistently. And I feel that there's so much hype around the stock already, and there's just so much like cult-like investors with it, and definite long-term investors. And I can just imagine once this company starts becoming profitable, smoothing out their production line, more cars, better, I feel that they'll be able to improve their profit margins, and with this comes a lot of positive profit. But yeah, like I said, I feel that this tweet is really going to affect Elon for quite a while, or haunt him at least. I don't really care about what Elon thinks about the company stock-wise. I care about his car designs, his latest acquisitions and stuff he's got coming up, and stuff like that. I definitely do think the stock is overvalued at the moment. And the reason I say it is because from the bottom low to the quarter one's earning release date, there was 121% increase in the stock price. So this isn't sustainable, especially not in a 42-day period. So I did expect a big correction coming. I'm not surprised. This is definitely a catalyst for it. I'm looking at this as a major opportunity to get stock at a discount because, as I said, I'm a long-term bull for Tesla. I really do think it's going to do well, a crazy innovative company. So I'm just looking at this as a discount to better my position, and I'm very excited. I don't think it's going to go to $200, that's for sure. I personally don't even think it's going to go below $400. But I definitely do think it's going to be going a bit lower. I do plan on taking full advantage of this. I do have cash reserves at the moment that I'm going to be putting into that, but I'm going to kind of be a bit smart about it. Normally I've just been buying lump sums, but I feel this time I'm going to take a mature approach to it. Normally I get too excited, but I'm going to do a little bit of dollar cost averaging. So by doing this, you're either buying on the way up or the way down, and it kind of just averages out to a decent price over time. This has been proven over and over, and serious ambassadors for it, such as Warren Buffett, that this is one of the best techniques for investing. I feel like I know I'm not going to be able to time the market bottom. I don't plan on it. I never do plan on timing the market bottom. I know it's pretty much impossible, but I do plan on just bettering my position, and I feel like this is really a great opportunity for us Tesla bulls. So to conclude, I'm not going to be selling at all and trying to buy a cheaper cost, just because I know you don't know how to predict Tesla. And the thing is, maybe with Battery Day they could be releasing some like really crazy news. If not, makes the stock go even lower, it's fine. I'm buying in even more, so it's fine. I'm not too stressed about that, and I prepared myself to ride this crazy train it's on. So yeah, I'm ready to steam forward. If you like this video, give it a thumbs up. It lets YouTube know that you like it. If you like the content I'm putting out, subscribe to the channel, comment more of what you want to see. And yeah, I've got big plans of making as much content as I physically can in the future to come. So if you enjoyed, see you back with the next video. Cheers.